we've got Ashi Anand as well joining in on the show right now to talk about what he's making of the markets right now. Ashi, hi, afternoon. Good to have you on the show. What's the next trigger that the markets are awaiting? Because we've been pretty range-bound, if you please, for the last many trading sessions now and quite lackluster on many days.
Sure. Firstly, thanks for having me on the show. So in terms of the next trigger, right, I think there are three core things that we are really kind of focusing on in terms of wanting to see clarity on that. Firstly, there are two looming uncertainties on the market. Any clarity around what's happening either with kind of Trump tariffs, right, and what the kind of overall end game is. I think any clarity around that could very clearly act as a trigger for some form of an up move. The second element is really what's happening with Iran and Israel. That is a potential conflict that has the kind of potential to escalate quite significantly. Hopefully, it kind of remains where it is at this point in time, and Iran doesn't go in and blockade the Strait of Hormuz is one of the concerns, or like other kind of players get involved in this conflict. As long as it doesn't kind of escalate further, that is kind of good news. Every passing day where you aren't seeing further escalations would be seen as the markets of sign of this not kind of going out of hand. So I think, firstly, for kind of a more prolonged up move, some clarity around both of these elements would kind of help some amount of negativity associated with this basically going away and could help markets move up. From a slightly longer term perspective, the one big positive for this year is the fact that interest rates have been reduced by 100 basis points. The RBI has also cut CRR amidst various other liquidity measures. Monetary policy is clearly easing, and the overall growth slowdown that we have witnessed both in the Indian economy and in corporate earnings, as interest rates start to come down, this should help kind of propel consumer demand. It should help propel larger ticket consumer kind of purchases such as auto, real estate, etc. So you could see some form of a demand revival happening there. It is again also very positive from a capital goods perspective because ultimately the IRR and the payback periods on new incremental capex are determined by a cost of borrowing. So I think this overall growth slowdown that we are currently witnessing, having interest rates come down is a very important kind of first step towards an eventual growth recovery. And as markets get more confident about this, I think that is really what kind of waiting for in order to see a more sustained up move in the markets.
Okay, so that's your take on a couple of those sectors. But Kunal, Ashi touched upon the financial space, and one of your picks from the space today was AU's small finance bank. But what are you making of some of these other banks that are very quietly surging in today's trading session? The likes of RBL, that's up 4.5%. You have Bandhan Bank that's doing well. Are you spotting a breakout anywhere?
Yeah, so I think RBL Bank is something which looks attractive. Bandhan Bank is still some distance away from a breakout, but yeah, I think the strength of the stock has shown the recovery from its 52-week lows, or rather the lows in the month of March 2025 for both AU Small Finance Bank, RBL Bank as well as Bandhan Bank. I think has been very, very noticeable. Now, this is the dichotomy for the bank nifty traders, because right now we are not looking at the likes of large cap names HDFC Bank, ICICI, Axis Bank or Kotak Bank showing any kind of a major breakout. They played their part in the first 3-4 months of this calendar year, where from Jan Feb lows, Kotak Bank was one of the ones which moved up from 1600 mark towards 2000 plus levels. HDFC Bank also is now chugging around the 1900 plus mark. So they played their part in the first 3-4 months, and now it's the other leg of the bank nifty which is starting to look attractive at current level. So the momentum is shifting, and this probably gives a phase where the large cap names are taking a bit of a rest before they gather steam and participate back again on the upside. So this actually indicates that the bank nifty and the overall structure as well as the context of bank nifty is very much on the positive side, because generally when you see such kind of a internal shift which happens within a sector, that's generally considered to be positive.
Okay, so that's the take on some of these banking names. But Nagraj, before we let you go, you did say Trent Avenue Supermart was something that was looking good to you on the charts. But if you compare it with Trent, would you still be betting on Avenue on the charts? Which of them is looking better? Because both of them are holding up very solidly in today's trade.
Yes, rightly said, both of them are holding on. But chartically looking, DMart, Avenue Supermart is looking positive, I think better than the trend. It is currently placed at the hurdle, important hurdle. Once it moves above that hurdle, I think more upside towards 4,500, as I mentioned, is likely, which is the next set of resistance. And the support placed at the 200-day EMA at the support, and overall chart pattern is looking quite positive.
All right, so that's the take on some of these retail plays. But Nagaraj, on that note, we'll let you go. Thanks so much for joining us. Well, let's move on then, and all eyes later today are going to be on the Fed meeting outcome, where the Fed is largely expected to keep the rates steady and markets are bracing for what comes next. The dot plot is going to be important to watch out for in case there are any indicators of any rate cuts in the year to come ahead. And of course, the Fed chair's commentary is also going to be very key to watch out for. But we have Ankur, who's joining us with a list of expectations of what we can expect to hear later tonight when the FOMC outcome is out. Ankur.
Yes, US Federal Reserve outcome will be there later tonight, at least for us, and the expectation is that there will be status quo in this Fed meet as well. As we understand, in the past 3 meets, US Fed has decided to stay put at 4.25% to 4.5%, and this has been the scenario after 18th of December, where the last cut actually happened. But more importantly, market will be watching out for the dot plot and whether or not there is more than one cut in this calendar year. In the last US Fed meet outcome, it was decided that 1.6% was the growth forecast which was given, which was down from 1.7% projected earlier, and similarly inflation projections were increased to 2.8%, but we need to wait and see how much of the addition is actually happening due to the tariff scenario, or more importantly geopolitical tensions, and especially after Israel and Iran everyday kind of escalation kind of a scenario. So we need to wait and see what is the commentary on that front, because there has been increased pressure, especially from US President Donald Trump, who has been quite vocal about Fed need to cut rates, and that should happen now. But while the expectation is there to stay put, at least in this meeting outcome, but we need to wait and see whether or not dot plot actually considers more than one rate cut later this year.
Right, that's what we can expect from the Fed meet this time around. But Ashi, what is your own sense of IT? And I'm asking because that's perhaps the most US-linked sector, if at all. Other than a few niche IT companies from within the mid-cap arena, the larger services play and the concerns around if the tariffs are slapped, what kind of a slowdown would it get into, and then what happens to client spends, and it's pretty much a domino effect from there. Do you think IT is still worth risking it?
So IT is a bit of a difficult call, I think, but the one important thing to understand is a very large amount of the concerns do seem to be priced into the kind of valuations. So if you're looking at kind of Infi, you're looking at TCS, look at any of the mainstream kind of IT companies, look at their valuations to the overall markets, to peers, to their own history. There is a lot of kind of valuation comfort that is there. Our view on IT as a sector is that if you are going to see a more prolonged US kind of US economic weakness or even a recession, if you are going to see a growth slowdown, we don't necessarily see further downside in these companies. We believe you are factoring in a lot of these concerns. However, if one were to be able to take a call on things not being as bad as they are currently being panned out to be, right? That Trump is actually using this as a negotiating lever, but the actual tariff outcomes are going to be a lot more benign than kind of tariffs being thrown around at this point in time. If you do end up with an outcome a few months down the line where there is greater clarity around tariffs, it not being as bad as expected, and kind of therefore a lot of pent up demand of US corporates who kept spending on hold actually gets unleashed. I think this could be a place to kind of get a fairly interesting bounce back rally where, given how cheap valuations are, but you are kind of quite dependent on that event in terms of how exactly kind of US trade, US tariff, and the overall economic outlook does kind of pan out.
That's Ashi's take coming in on IT and what eventually could happen in the sector going ahead. But Kunal, we're almost close to wrapping up for today's trading session. Give us a sense of where you see tomorrow in terms of levels on the Nifty, because today what started out pretty silent took a good turn on the upside, and then we've just fizzled out from there. So what's the outlook tomorrow? Can we expect some stability provided everything on the Fed front goes along expected lines?
Yeah, so I think my expectation is that assuming if there is nothing negative or something which is beyond expectations from the overall market on the Fed side, then I would actually believe that we may probably see a much more stronger move on the index tomorrow. So my belief is that we could be probably looking at retest of 25,000 mark, or maybe a scale above the 25,000 mark for the index tomorrow. And I think what's leading the charge today, what's been showing signs of strength in the last 2 days, specifically today, we looked at the put call ratio, we looked at the option shorting for indices. Bank Nifty is the one which is actually showing signs of strength. So if the markets have to move up higher, I think a major part of the up move should be done by the Bank Nifty itself.
Okay, that's that on banks. But Kunal, the fact that you were also bullish on some of those IT charts, right? And you were hoping for a consistent breakout. That doesn't seem to be happening, not on a daily basis for sure, but are you still bullish about the prospects of a meaningful bounce in IT, which has already happened actually, to think of it, for the last 3 months?
Yeah, so I think major part of the rally in the last 3 months has started off for the IT pack, but then I look at it this way, that many of the stocks like Infosys, and large cap names are still trading below their 200 moving averages. So in the context of where the markets are, in the context of which sectors have participated, and then in the context of how the IT stocks have actually participated, the participation has been very shallow as compared to what the usual composition should have been. So the markets have moved up higher, IT stocks have also managed to chug along, but the performance has not been very strong. The second part is that the mid-cap IT stocks have actually done reasonably well, and the large caps have not performed. So that also puts the onus back again, that the large cap IT stocks sooner or later will start to show signs of strength. And in the last 3-4 days, where we've indicated that the IT stocks would start to go into a breakout mode, we've seen those strength emerging for large cap IT names. Infosys coming back into a breakout above 1900 levels, sustaining those 1900 mark, HCL Tech, TechM, etc. So I believe that that's a very strong signal that we are looking at a strong uptrend for the IT stocks. And maybe there could be odd days where the index may just about stagnate or go into a mild correction, looking at the market tone. But then I think overall, when you look at this from the next 2 weeks, 3 weeks kind of a purview, I would look at the IT stocks with a view of 3 to 5% at least further upside on the index as such.
Okay, so that's the take on some of these IT counters that Kunal is liking at the moment, despite the run-up that we've recently seen in IT names. Actually, very quickly, before we let you go, some departing thoughts on what the market setup could be like for the rest of the week and in the near term, given everything on the Fed front is along expectations.
So pretty much, given the fact that we manage longer-term PMS portfolios, we tend to be a lot more fundamental long-term investors. Accordingly, we don't have, and we don't even try to have, a very strong view in terms of markets in the short term. That said, it was obviously something that we do kind of monitor. The way we kind of look at markets in the near term is we find it difficult to, we don't really see markets crossing previous all-time highs, given the fact that there still are uncertainties around Trump and Iran-Israel. If some of these uncertainties do go away, we believe that could kind of lay the foundation for some kind of move, potentially beyond the previous all-time highs. But from a slightly more medium-term perspective, the growth recovery for the Indian economy and Indian corporates is going to be something which is very important to watch, because that would actually give sustenance towards that rally.
Okay, Ashi, good to have you on the show as always. Kunal, we'll let you go on that note as well.